Well, I think you've got to address, obviously big stocks. So, what's going on in the big end of town? Where has there been maybe excess investment, and hence sort of you're correcting, growth can really quite disappoint where people are still extrapolating high levels of growth. Certainly, I think in most things, China related, there's already been a big shift down in growth expectations. Not saying it's unjustified, but it's sort of already happened. Look, I think, you think about what Amazon and Microsoft are doing, and as they get larger, clearly the impact they're having on the companies that compete against them is also becoming, more, amplified. So a lot of capital is being sunk into software as a service, and it's a hugely expensive. Most SaaS stocks trade on, as you know, multiples of sales, not multiples of earnings. And look, I think increasingly we see the competitive environment deteriorating. Those companies that went through a couple of billion in sales, and investors expected that sort of exponential growth rate to continue. We just see that they're increasingly running up against either each other or Microsoft, Amazon, Google, etc., are pushing down into their vertical. And I think the market, is very risky in many of those stocks because there's no margin of safety. A small change in the competitive environment. And it's not just software, software as a service. It's also thinking, just changes in the regulatory environment for some of the big internet stocks, and just the way that I think Facebook is a big wake-up call because people and investors initially thought Facebook, the issue with Facebook was this regulatory scrutiny. And it is, but there's something, it goes beyond that because, Facebook is actually the success of Instagram and the success of, now they own Instagram, I know that, but if you think the business model shift is much more towards video and video engagement, it brings into focus how monetization may change. And that's uncertainty for their entire business. And so, I think for the first time, tech investors are starting to, be sort of, I think, challenged that a lot of the certainties that have gone through, that have really pushed this cycle into the into that euphoric phase, are now going to be questioned. And so I think there's a huge amount of crowding into structural growth, perceived structural growth winners, and the weaker ones, the ones where no one's quite sure what the profit margin structure is going to look like, at the terminal point. I think the discount rate on those will go up a lot, and hence their prices will come down.